Okay guys, we're going to pick up where we left off last lesson doing 1.12. Okay, so that's on page 17. Okay. Alright, so just to recap over the situation, we're calculating GST and we are doing journal entries to record the purchase of the asset as well as depreciation. We're going to post those to the ledger and we are going to then display how that would look on the statement of financial position. Okay, so recapping, Fruz Wholesalers purchased a new truck from Northside Motors for $38,500 including GST on the 1st of October 2020. The new body was installed for $5,500 cash including GST to enable the truck to be used for furniture delivery. Rego of $525 including GST was also paid. The estimated life of the truck is 4 years and the estimated residual value is 10 grand. We're using the straight line method of depreciation. So we started on point A, okay, show the journal entries necessary to record the above information up until 30 June 2021. So we had a bit of a discussion last lesson, okay, that the 2021 financial year goes from the 1st of July 2020 to 30th of June 2021. Okay, so that means this asset was purchased during the 2021 financial year, and we determined that they'd owned the asset for 9 months of that financial year. So we went and did our journal entries, okay, and this is how they looked. I stopped doing that. Okay, so we purchased the motor vehicle on the 1st of October 2020, okay, for $38,500. $38,500 including GST. Okay, so we did accounts payable Northside Motors $38,500. Motor vehicles 35, GST credits received 3.5. Then we accounted for the new body that was fitted to it for 5.5 including GST. So we paid cash for this. 5.5 was the gross amount. Motor vehicles debit because this 5,000 gets added into the motor vehicles account on top of the actual asset that was purchased, along with GST credits received. And then we paid the motor vehicle registration, $525 including $25 GST. So that was that. Okay, and then what we also did was we went and calculated how much our GST was going to be. So we determined, right, $35,000 excluding GST for the truck, $5,000 for the body, and that matches up with these figures here that we've put in our journal. And we've then gone and calculated depreciation using the straight line method. So original cost minus residual value divided by the estimated useful life. So in the 2021 financial year, $40,000 minus 10,000 residual value, pretty sure is what they said, $10,000 residual value divided by estimated life of the truck is 4 years. So 40,000 minus 10,000 divided by 4 gives us 30,000 divided by 4 gives us 7,500. Okay, and then we chatted about how that 7,500 is depreciation for the full year. Okay, but we purchased it on the 1st of October, so we didn't own it for the full financial year. We only owned it for 9 months out of the year. So in order to apportion this 7,500, we divide it by 12 months in the year and then times it by the 9 months in the year that we actually owned the asset. So the depreciation charge therefore for the financial year is 5,625. So as part of part A, show the journal entries necessary to record the above transactions to 30 June 2021, we need to do the journal entry for depreciation. So to do that, okay, doing the journal entry, coming over here, and okay, so we're in June now, June 30. We've come to the end of the year, and that's 2021. Okay, and so we want to use depreciation expense. For 5625. Okay, so depreciation is an expense, it's a debit, so we're increasing our expenses here, and our credit account is accumulated depreciation. Narration, write-off, depreciation for the year. That's that. Okay, so that's all the journal entries that they want us to do. I don't want to do that, I want to do this one. Right, so now we need to post it to our ledger. So I'm going to split my screens, new window, arrange all. Okay, and get our ledger over here. Business name equals Ferrous Wholesalers. Okay, so we've got, in order to do these in RILO orders, we have to have our expenses. So that's depreciation expense. Assets, so we've got, oh, hang on before I get too far ahead of myself here. We also have motor vehicle expenses. Assets, let's fix this up, motor vehicle expenses, registration. F2, motor vehicles. Okay, and then sitting underneath this, so accumulated depreciation is essentially, it's credit in nature because it is deducted from the value of the asset. So essentially it is what you'd classify as a bit of a special liability. But since it is depreciation relating to the vehicle, okay, we group these two together and we group them together on the statement of financial position. Okay, and hopefully it will make more sense as things unfold here. Okay, so we've got that. We need to have GST credits and accounts payable. So we need our liabilities. Accounts payable will be first. GST credits received. Okay, so we've got that one. Got that, got that, got that, got that. Don't have that one. Got that one, got that one, don't have that, got that one, got that one. Okay, so in our assets, in our order of liquidity, cash at bank would come first before motor vehicles. So I'm just going to insert some lines and put that in there. Okay, so I'm just going to hold down my control key, highlight these particular cells and bold them. Control B. Okay, let's post these to the ledger. Okay, so our first one, motor vehicles, we're posting $35,000 debit to the motor vehicles account. Okay, so we get our date right. October the 1st. And our particular, we'll do particulars last. $35,000 debit. particulars are the credit side of the journal entry, so accounts payable. I'm just gonna, rather than folio it, just give it a quick color code so then we know that we've done that one. Okay, GST credits received, October the 1st. The same as above. What's on the credit side of the journal entry? Okay, $3,500. Our journal entry is telling us to send $3,500 debit to the GST credits received account. So the nature's $3,500 debit balance. Okay, and then to finish off that journal entry, $38,500 to accounts payable. So October 1st, our particulars of motor vehicles, GST credits received, and our journal entry says $38,500 credit to that account, so our balance then is the $38,500 credit. First one done, debits and credits balance. Let's move on. Okay, so then motor vehicles account again. On the first, particulars of cash at bank from the other side of the journal entry, 5,000. We're adding a debit to a debit, so equals 35 plus 5,000. Our balance for motor vehicles now becomes $40,000. GST credits received, cash at bank. Okay, so we're sending $500 debit to the GST credits received account, so 500 debit, so our balance here becomes, it's a debit plus a debit, and last line, $5,500 to the cash at bank account. October the 1st, particulars from the other side of the journal entry, bank, and normally I'm sure there would be other transactions in the bank account that would have come before this and we'd have an opening balance, but we'll just run with what we've got here. We have 5,500 credit. Alright, motor vehicle expenses, Rego. So, October the 1st. Our particulars. So, our journal's telling us to send $500 debit to the motor vehicle expenses account. And our particulars come from the other side of the journal entry, which is cash at bank. GST credits received, debit $25, so we'll scroll down. October the 1st again. Cash at bank will be our particulars from the other side of the journal entry, but we're posting $25 debit to the GST account. So $25 equals 4,000, so debit plus a debit plus that 25, our balance is now 4,025. Folio that one. Okay, another entry, cash at bank, credit 525 to the cash at bank account. So come back up here on the 1st. Wrong account, where am I going? On the 1st, we've got motor vehicle expense and GST credits received 525, so it's a credit plus a credit, so equals 5.5 plus 525, so we're increasing our credit balance in the bank account. Okay, last journal entry, depreciation expense. So we're now on June 30. So it's telling us to send 5,625 debit to the depreciation expense account. So 5625 debit, and our particulars from the other side of the journal entry. Now I'm just shortening it. We'll get in the habit, guys, of typing accumulated depreciation fairly often, so typically when we're typing accumulated depreciation we can shorten it to that I've got there, because we'll get a little tired of typing accumulated depreciation after a while, and I will accept that just fine. Okay, so that's that side of the journal entry posted to the ledger. Okay, and last one. Okay, it's telling us 5625 credit to the accumulated depreciation account, so 5625 credit, and particulars from the other side of the journal entry, depreciation expense. And that is it. Okay, so that's those posted to the ledger. Our debits and our credits marry up. Might just tidy this up here a little bit. Just trim the excess space that we don't need so that it all gets nicely condensed up. Okay, so the last part of the question, what we've done here, show the ledger accounts necessary to record the above journal entries, include the profit and loss summary account. We're not going to bother with the summary account, okay, so we'll just worry about the ledger accounts, the important ones for the time being. Okay, and we'll move on. Show how the non-current asset would appear in the statement of financial position. Alright, what I'm going to do here, guys, is I've emailed you a spreadsheet that just has this tab in it, Reports tab. What I'd like you to do is pull that into the spreadsheet that you're currently using for 1.1. So the way to do that, open the file that I've emailed you, the Reports tab file. Click on the Reports tab. I want you to go Move or Copy, and then to book, the first drop down, I want you to transfer it into your working file that you are using, and I want you to move before sheet, trial balance, and create a copy. What that's going to do is, in your working spreadsheet that you've been using, hopefully you now have a Reports tab. Feel free to stop, rewind the video in order to make that happen. Okay. Once you've got that happening, I'm going to arrange all again, and I prefer to work left to right. Okay, and in the reports, we want to show, the task asks us, show how the non-current asset would appear in the statement of financial position at 30 June 2021. Okay, so with this here, we have the opportunity to show multiple years, but we're not going to for this one here. So what we're going to do, business name, get rid of that, business name, I'm going to cheat, equals that. Oh, old spreadsheet, we should probably change this to statement of financial position. Position as at 30 June, and you don't need to put the year at the end of that because we're going to nominate the year here, 2021, if I can type properly, 2021. Assets, so what the question is asking us to show is how these accounts look on financial statements. Okay, so we're going to put in motor vehicles. And we are going to pick up our closing balance of that asset account, okay, because after these transactions there's been no more activity until 30th of June, so our closing balance of this account at 30th of June will be this balance here. Okay, so we're going to put in 40,000 here, and same again, there's been accumulated depreciation. Okay, at 30th of June we did this entry here, and so our balance at 30th of June is 5625 credit. So we're going to put in minus 5625. Put an underline underneath both of those. And so we want to go equals okay, so I've used the formula there. I've plus them because this figure is a negative in the in this cell here. Okay, obviously we want to plus them so that we can activate this negative here. Or alternatively, you could get rid of the negative, and your formula could be that minus that. Okay. So that's how it would display. We can play around and we can get rid of these extra columns here. If we unmerge these here, we can hide these columns. We're just tidying things up. Right click, highlight them, right click, hide, that gets rid of them, and then we can merge across these cells. This is just playing around with Excel and building our Excel skills. Just merge and center. Okay, so that's the expectation for 1.12. Okay, so again, this is how it would display on our statement of financial position. This is just an excerpt. Obviously there's all the rest of the assets and the rest of the liabilities and things like that, but this is how fixed assets display on a statement of financial position, motor vehicles, or whatever the asset might be, less their related accumulated depreciation, with a subtotal off to the side. Okay, I'm going to wrap it up there and let you get on to going on to 1.13. Okay, similar situation. Okay, asset, freight and installation. Go and calculate the depreciation using the straight line method. Do the journal entries. Okay, it's part year. It's purchased on the 1st of February, and they want you to do the journal entries up until 30th of June 2020. Okay, so you've only got one financial year to take care of, so the question is very, very similar to 1.12. I'm going to wrap it up there. Hopefully this was helpful and you're able to keep going. Bye for now.